So what are we gonna do today, and with whom especially? I'm gonna give the floor to the 5 panelists to introduce themselves, but let me first say a few general remarks. I'm very happy to have a very diverse set of panelists with us this morning. Why I say diverse? For different reasons. In terms of geographical origin, they come from Africa, they come from Asia, they come from 2 institutions that are actually based in the same street in DC, almost one in front of the other. And they, the 5 panelists belong to different institutions. So we have a think tank based in Quezon City in the Philippines. We have a private foundation established in 1986 in Japan. We have a program supported in Mozambique by the UK and the Swedish cooperation, and we have the IMF and the World Bank. I think that when I mentioned 2 institutions based on the same street, you guessed that I was referring to them. So why it's important to have a diverse team is like in rugby. After the previous session now, I feel obliged to say something about rugby before getting into the topic of our session. So when you arrived here, you probably noticed that there's a rugby stadium just in front, and they advertise what they call the ASM experience in their museum. Now, what is the ASM experience? ASM is the name of the local rugby team, which is a major team in France, but actually the experience of this club is rather negative, I would say. They, before winning the title of French champion for the first time in their history, they had lost 10 finals in a row. So the composition of a team and the diversity of a team is important to achieve success. If you browse their webpage, they advertise the 2 teams in history in which they became French champions, 2010 and 2017, but they also advertise the 12 finals that they lost. So they pretend that they've been vice champions 12 times. Being a vice champion is losing, is not winning. So I hope that the diversity of our team today will help us winning your attention and trying to deliver interesting insights about the topic of this session. So I give the floor to each of you to introduce yourself, your affiliation, and what is the viewpoint, the angle that you're going to bring to our discussion. Clearly, don't hesitate to raise your physical or virtual hands online. I presume that someone from GDN is going to follow the questions that are going to be asked by participants that are not here. So, Xavier.
Thank you very much. Thank you for having me here. I like this combination of policy and more academic angles. I have a foot in academia, so I really like this aspect. So my work is both partly analytical work, so we try to analyze the impact of digital finance, and currently especially for public expenditure, so how public expenditure can leverage these new technologies. And on the other side, some technical assistance mission we have been doing over the past years, helping different countries leverage new payment and settlement infrastructure and how it could match policy goals.
Okay, thanks a lot.
Thank you. Good morning, everyone. I'm very happy to be here. My name is Friederike Rühmann. I'm a senior financial sector specialist at the World Bank, and I bring to the discussion of experience from financial inclusion work, consumer protection, and development finance from various experience across different international organizations. And I would like to share some insights today on ongoing discussions on financial inclusion from at the G20 level, especially discussions related to financial health, and also from access and usage, which we will discuss more in detail, that actually shape policy and innovation. And I will also share some recent Findex data. Basically, that's the survey that tracks how adults access and use financial services, if you are not aware of this. And these figures, we had a little bit on the progress and the gaps, also in the previous sessions. These figures, I will bring some more highlights on whether there has been progress and what are the remaining gaps in this regard. And yeah, I'm also looking forward to discussions on CBDCs with all of you, which will be probably very hot discussions and exciting ones. So I'm very much looking forward to this. Thanks.
Good morning, everyone. I'm Hideyuki Shiozawa from the Sasakawa Peace Foundation, Japan. And today, are there anybody from Pacific Islands? Only one. Two. Oh, okay. So I'm Japanese, but I talk about things based on my experience in the Pacific. I have been working for Pacific Islands over 20 years. And let me introduce about some outlines of Pacific Island countries. There are 14 independent states in the Pacific Islands. And except PNG, Papua New Guinea, Fiji, and Solomon Islands, the size of the population is between 10,000 to 300,000. And the GDP is between 100 million and 1,000 million. And in many countries, private sector is very weak. Like 60% of GDP depends on government expenditure. And some countries, the 30% of GDP is related to remittance from outside. And we held the DX meeting July this year in Samoa. And there are discussions between Niue and Papua New Guinea. But the population of Niue is only 1,500, but Papua New Guinea has 10 million. But they discuss the same issue. And there are some changes in those countries. Before, the access to internet access or connection is very bad, but thanks to Starlink, many people in remote islands or rural areas, they can access internet now. Also, solar power introduced by some development partners supported that. And the advantage of digital finance for them will be the convenience about their daily lives for payment and also transaction. And also they can keep the transparency to avoid any corruption, hopefully. And for government, taxation will be improved, and also their financial management will be improved, we hope. And but I still have concerns about the digital DX in Pacific Island countries. I feel that there's a lack of digital literacy among people, and they are also weak at for any cyber attacks or any malware or those kinds. And their basic infrastructure is very weak. I was in Tonga last week, and on Friday, there are several blackouts happened. And also they said 3 weeks ago there was no fuel on the island. So it's very vulnerable for that. And the internet server is not in each country, but in other countries outside. So those are the concerns I have. Thank you.
Hi everyone, so I am Jean Clarisse Carlos from the Philippine Institute for Development Studies. So since the pandemic, most of my published work has focused on women's financial inclusion in the digital economy, especially on e-commerce, MSMEs, cross-border trade, informal work, platform labor, and migration. So as an opening, I'd like to highlight some low-hanging fruits in the digital finance, particularly on e-commerce and MSMEs. So like many aspects of our daily lives, gender stereotypes persist in digital finance. MSMEs are the backbone of several developing economies, including the Philippines, but most women-led enterprises still remain small and informal. That informality adds an extra layer of exclusion in access to credit, insurance, and social protection. During the pandemic, many women entered e-commerce to compensate for income sources losses. Data shows that a significant rise in women selling goods online, mostly food, clothing, household items. Yet women vendors still earn less than men, largely because of the kinds of products they sell and consumer bias that favors men when buying higher-end goods. Women entrepreneurs also face greater financing barriers. They rely heavily on personal savings and family networks rather than on formal credit channels, partly due to documentation requirements and the absence of collateral. Many are first-time business owners who juggle unpaid care work with entrepreneurship. In this context, fintech services, especially e-wallets and microloans become critical entry points for financial systems. These tools offered speed and flexibility where banks could not. But the bigger question remains, can digital finance move beyond access to truly build resilience and empowerment? So I'll continue this conversation later on.
Thanks a lot.
Good morning, and it's a great pleasure for me to be in this conference and in this panel. Wow.
Closer and louder. No, it's working. It's working.
Okay. Hello. Okay. No, I was saying that thanks, and it's a good pleasure for me to be in this conference and in this panel. I am Esselina Macome from Moçambique. I do have 3 hats. One being the CEO of this foundation dealing with financial inclusion in Moçambique. Second one being a professor at a university. And third one be a chair of a commercial bank in my country. And in all these 3 hats, I do have some things in common, which is my interests. And my interest is related with development, is related with how to give access and improve the life of people that are in less condition. And in that one, financial inclusion can also contribute for that one. For this panel, I am coming here with some points in mind. The first one is related with the digital finance itself, is how digital finance can really contribute for development, how digital finance can make empowerment for vulnerable people. And within that, I will discuss the issue of consumer protection, but also the financial education. The second point will be related to the regulatory environment. How is the environmental regulation or regulatory environmental appropriate in order to have digital finance that really contribute to the development? And here I will also talk about fintechs, the role of fintechs that I have within the digital finance. And in my last part, I will come with some ideas around the CDBS on how can also contribute to digital finance. But all my talk are going to be around development. All my talk are going to be around how are we really improving the quality of life of people. Financial inclusion without improving quality of life is nothing. Financial inclusion, if it's not being seen as development, also doesn't contribute to nothing. Thank you.
Thanks a lot. So thanks to Esselina, Jean, Hideyuki, Friederike, and Xavier for this introduction. I realize now that I have underestimated the diversity within our team, given that several of you have actually multiple hats, so this is great. Our discussion in this roundtable is going to be initially structured around 3 questions. So I'm going to ask now the first question, and we're going to hear from our panelists. And the first question that I would like to share with you is the following. How can we move from simply providing access to digital finance to ensuring that it builds genuine financial health, resilience, and economic empowerment for the most vulnerable portions of the population in low and middle income countries? So, Friederike, may I ask you to start?
Yes. Thank you so much. So yeah, before responding actually to your question, I think it's very important to get, first of all, a global picture. So I was mentioning that I will cite a couple of index data, which I believe are quite important to understand where we stand today on financial inclusion. And indeed, there has been tremendous progress on financial inclusion itself. But of course, you have to narrow it down by savings, credit, and debt, etc., to really understand the full picture. So in terms of progress, if we look at the global picture, actually 79% of adults worldwide have a bank account today. And if we focus it on just low and middle income countries, the number is actually not that far. It's 75% actually of adults that have an account today. And this compared to data this is data from 2025, so quite recent. And if we compare this to data from 2011, that was actually an increase of 80%. So there has been indeed tremendous progress. And if we look at savings, like how many adults actually in low and middle income countries were able to save, it's 40%, so almost half. It's also not that bad, I would say. But then we have to kind of disentangle and disaggregate this data and to look more into detail, basically. So while 55% of adults in low income countries can actually also manage short-term shocks, a significant portion actually still remains vulnerable, especially in climate-related events, which are mostly in low and middle income countries. And they are actually over half of the individuals still affected, and they report income losses or asset damage. So this actually also highlights that there have been, of course, some advantages to some extent, but actually 40% also report that it's difficult to secure actually extra money for emergencies like a natural disaster, for instance. And that money worry actually even about monthly expenses or just paying medical bills is quite large. And another aspect that we also looked at, that the World Bank also looked at in the FinDex survey, is informal savings, which is a quite significant portion also when we look at financial behavior in low and middle income countries. And there we see that actually about 17% are using saving clubs or just maybe like lending from a friend or a family member. While this is of course positive and vital for them, this also often lacks, of course, transparency, security, and consumer protection associated basically with the delivery of these financial services. And formal borrowing, I mean, you assume, is also low, which is, so people are really relying on informal credit, which increases also the financial risk in the entire system and could cause systemic problems, basically. So nearly half of adults globally and a substantial share of low and middle income countries also report to access emergency funds only within 30 days. So it's big, underscoring basically persistent gaps. And based on this, these insights, that actually kind of demonstrates that there has been also a movement at the international level, explicitly at the G20 level, but not just, also in terms of financial inclusion in general, that there's really a shift from just barely looking at access and usage to rather more a global overall development outcomes as such. And this was also emphasized, for instance, last year, under the GPFI, under the Brazilian G20 presidency, which actually prioritized the topic of financial well-being during its presidency. And they came up with a policy note on financial well-being explicitly, where they defined basically financial health. They created a working definition, which defines basically to manage financial needs, cope with shocks, pursue goals, and also feel confident. So there are both subjective and objective indicators in this program. And on another note, also Queen Maxima, who is the was previously the special advocate to the UN for financial inclusion, also changed her mandate because of this development. So now she is the special advocate and changed her mandate to financial health. So, and in this context, also the current presidency, the 20 presidency under South Africa, also changed, kind of followed up on this debate and had a focus from access to usage of financial services, which could, of course, lead to further positive development outcomes, leading to increased resilience and financial health in this regard, potentially. Yeah, so, and based on this, in this note, so there will be actually a policy note, which the World Bank had the privilege to author, which will come out probably in the few days or in a week's time or so, which identified several barriers that we also heard already in the introductory remarks from the colleagues here, which highlight, of course, that products have to become more suitable, that you have to increase consumer choice, which will be promoted by fair competition, innovation, to expand actually consumer choice and drive product relevance, to enhance digital and financial infrastructure. We heard various examples here from different markets where financial infrastructure is not yet at the stage where it has to be to really get all the full benefits basically from digital financial services. And this also includes, of course, government leadership that you need to have to promote and be able to scale potentially digital payments and trust in the system. I mentioned product suitability, but then they have to be also, of course, safe. So in the last session, we talked a lot about artificial intelligence, but I was missing a little bit the points on consumer protection. How important it is actually to have robust consumer protection, supervision, and oversight, of course, linked to potentially data protection and so on. But we will get more into the details later on. And then, I mean, we can speak later a little bit more about data. I think I gave a lot of insights on the data as such. But before I stop and let my fellow delegates talk here, I would like to also highlight that this report on access and usage that will come out will also highlight various barriers that we should not forget and present also some preconditions, of course, for digital financial services to thrive, basically. And one of them, it came also up already in the discussions various times, and I think even in all the sessions that we had during the last 2 days, is this lack basically on financial and digital literacy. And we have to be aware that today we still live in a world where adults in low and middle income countries still lack even essential skills. We talked, I mean, mobile ownership has increased and financial inclusion also accelerated tremendously through mobile money. But there's still a significant share actually of users that is still unable to read, understand messages, text messages that are maybe, especially in English actually, or even change pins by themselves. They need the help of some, friends or family members to be able to do so. And this actually highlights just tremendous gaps. And I would like to, before I stop, maybe, I would like to give you a very practical example. We've been working also with the Central Bank of Liberia. And Liberia is a least developed country, so it's a more tangible example, I would say, also in the development context as such. And the bank actually conducted a survey of the 8 most populous counties and found that 77% of adults never received any formal financial education and cannot do basic budgeting or financial planning. And I think that's a very worrisome in this 22nd century, a very worrisome fact that we can all work through to make this, to change this basically. But I will stop here and let others.
Can you just pass the mic to Oh, okay, that's great.
So actually, this is a very good introduction because mine is very case specific, specifically women in the Philippines and in SME. So I think thank you very much for that ground data. So as Simone said, asked earlier, how can we move from simply providing access to digital finance to ensuring that it builds genuine financial health, resilience, and economic empowerment to the most vulnerable? So the past few years have shown that digital access alone does not guarantee empowerment. Digital finance has helped women enter markets, but it has not always helped them stay there. So as she mentioned earlier, so some shocks from climate disasters could ruin a business, especially micro businesses. So many women-led businesses expanded their customer base through e-commerce, but few have seen this translate into greater savings or access to formal credit. For most, digital wallets are used for quick transactions such as payments, withdrawals, and deliveries, rather than for building capital or reinvestment. So these tools often serve as stopgaps for survival, not stepping stones for resilience. So women who joined e-commerce gained flexibility but remained concentrated in small-scale, low-margin trade. Limited digital literacy, high logistic costs, and unstable connectivity continue to constrain growth. Many still depend on informal networks, so as you mentioned earlier, like family, neighbors, cooperatives, to restock inventories or to recover from shocks. In many local markets, women selling food, handicrafts, or household goods online saw increase in visibility but minimal improvement in profit margins. Daily earnings were often spent on household needs, leaving no savings buffer. When courier delays or platform outages occurred, their operations halted immediately. So building genuine financial health requires more than technology. It requires capacity, capability, and confidence. So mentorship and training are essential, not only in using digital tools, but in interpreting data, managing budgets, and planning for long-term growth. To their credit, so to the Philippine government's credit, they had laid an important foundation for inclusive digital finance. So the Central Bank of the Philippines spearheaded the digital payments transformation roadmap and launched the open finance framework to make services more interoperable. So we also have the Department of Trade and Industry, who implemented the e-commerce Philippines roadmap to formalize online enterprises, simplify registration, and promote e-commerce literacy. Meanwhile, the Department of Information and Communications Technology improved connectivity and supported digital startup programs for rural entrepreneurs. Yet, implementation remains uneven. So, urban MSME benefit from better access to digital tools, but in rural peri-urban communities, entrepreneurs still face slow internet, poor platform trust, and limited awareness of government support programs. As many women entrepreneurs joke, online gambling applications are more user-friendly than government portals. So they'd rather just access the gambling applications rather than the government website. So this was also tackled on the previous session about how state handled their websites. So some encouraging models have emerged. So in some rural areas in the Philippines, women cooperatives have organized shared e-commerce clusters, pooling delivery routes, coordinating logistics, and collectively accessing credits through digital payment systems. So this cluster showed that digital transformation can be community-based, not just individual. So inclusion policy should therefore go beyond counting how many people have digital accounts. The real measure lies in whether entrepreneurs can build assets, sustain their businesses, and recover from shocks. So empowerment requires pairing fintech access with microinsurance, simplified taxation, reliable digital infrastructure, and institutional trust. Having an account is one thing. Having confidence and capacity to use it is another. So I'll end there.
Thanks a lot. Esselina, do you want to follow up?
Yeah. Thank you for the question. And I'm here reflecting, moving from simple digital access. Really, if we see the definition of financial inclusion, access is just the starting point. There is no financial inclusion when we stop on access. We need to move to usage, and when we are in the level of usage, we have to ask ourselves, use for what? For what purpose? And will be really financial inclusion when it's contributed to the development and improving of the quality of life. And this is where it's coming the issue of financial health. Financial health is that we need to use our financial capability, our financial resource in order to creating this healthy that in the end of the day is contribute to the quality of life. In my country, we do have, we are in the second round of a national strategy for financial inclusion. The first round was mostly driven to access, because at that time, the level of access was very low. And as I mentioned, access is the first step. And what we have recognized, seeing, was that we have do a lot in digital, particular mobile man has contributed hugely to have the access. But the point is different use, and the use will be determined in type of product and service that are putting for available for the people. And here is coming the second point, is how do we design those products? How do we identify those products and services that people can have a choice to use? And here it's important to bring other component of how the product are designed. Our perspective is that the financial service provider, they have to design the product, take into account their needs, bringing the human-centered design approach in the center of their thinking. And we do believe in doing that way will also contribute to the protection, will also contribute to the level of selecting or decide which product that is affordable and also oriented to their needs. The other components that it is important is that when we put all those products, those digital financial service products, it is important that we have the component of context. Mozambique is a country that we do have the social and cultural norms. And those norms and social culture that have influence in the level how people can use. So when we design, putting the client, the consumer in the center, will be able to capture which social norms, which social aspect and attitude might influence the product that we're putting. Because if we are not taking this in account, we might end up designing a product that in the end of the day no one is using because it's conflicting somehow with their needs. The other thing is that it is important to have some regulatory aspect, particularly when it's come to the pricing. We are talking here for people for vulnerability, people that have very low resource. It's important to see how is the cost of those products in order to provide. And here the regulators are coming with some of policies on how the price can be leveraged. And one of the solutions is to have a infrastructure in place that facilitate interoperability, that facilitate that all financial service providers can use in a cheap way. Mozambique is in a country where is every year having climate shock. And the climate shock has influence also in the financial health. We are at this moment finalizing our national roadmap for green finance. It's important nowadays that when we do all these products, we ask ourselves, how sustainable are those products? How are we going to respond to the climate shock or the other shocks? So I do think that it's very important to have this aspect in that way. I will not talk about financial education because it was already mentioned. I will stop here.
Thanks a lot, Esselina. Xavier?
Yes. Thank you for all these excellent points. And I would like just to reinforce one aspect, which is the importance of the public-private relationship in all of what you described. And you've really highlighted it. At every layer, and maybe I will go a bit below what we are discussing, the usage, because that's the part I'm focusing on, the infrastructures. At every layer, there needs to be a coordinated strategy. And it's really a domain that you cannot just leave to pure private initiative or the government cannot do alone. So there is really a need of cooperation. One thing you highlighted, both of you, is in the resiliency of the basic infrastructure. So especially when fintech sometimes come from more developed countries, they have an assumption that everything is going to work, electricity, network, and so on, and no. So you need to consider all the options to have a degraded version of your service when the system doesn't work as well, or also invest in the infrastructure, and sometimes that can be the most critical part. At the intermediary layer, more when we talk about payment infrastructure, also it takes a lot of courage for public actors to step in. We mentioned the interoperability standard, for instance. I've looked in some countries and it's changing because the administration by regulation cannot just set a standard from an evaluator. It needs to engage with the actors, see what's needed, and it's not just standard. Sometimes it's creating a service, can mean creating an actual government-run service that operates some interoperability services, and it can be challenging, and it requires often, and you mentioned that, to raise the skills of the government's capacity to be able to really be part of the, also boot on the ground on this kind of things. And we have example of different countries that have been even producing a lot of the payment service and being successful in that with cooperation. So like PIX in Brazil or UPI in India. So it's possible to be part of it, but it's subtle. We also see really effort that failed because of lack of often expertise and also predatory vendors, I would like to mention, because often governments don't have the capacity externalized to an external company that jump in and don't tackle exactly the need of this population. And just to finish, you mentioned the digital literacy, the importance. Something to highlight because it's dear to me, and I started working in all that domain by being interested in technology education. One fact of financial literacy, digital literacy gaps is also the basic digital gap, and that's often gender-based. So like often men spend more time using electronic devices, and that results in then being able to more leverage these new technologies. That's something that needs to be compensated when the main mean of accessing finance becomes digital. It needs to be taking into account that there is already an existing gap in this literacy.
Okay, thanks a lot. So let me just bounce back on something that three of you mentioned. So the vulnerability of the population to climate-related shocks. So the Global Development Conference last year was in Fiji about adaptation and resilience to climate change. We are having this session while Hurricane Melissa is devastating the Caribbean, so Jamaica. Now it's moving towards Cuba. It's not only the most severe hurricane ever in the Atlantic, but I heard this morning on the radio that the majority of the 15 most severe hurricanes recorded over the last 2 centuries occurred over the past 20 years. So it's something, it's not just, a black swan is a recurrent thing. So I would like to know, for instance, from Hideyuki, whether you think that financial services can increase the resilience to these kind of shocks that I think are particularly salient for small island states in the Pacific.
When I think of the people's level, I know this is common in the world, but the basic behavior of people in the Pacific, like my friends in Pacific, they don't deposit their money. They receive salary every 2 weeks, then they use all in 2 weeks. Then also many of them, they don't have any credit card. Also, yeah, so based on those situations, I think education is needed at many levels. At the youth level, also general public, bureaucrats, also policymakers. Yeah. And also when policymakers understand those situations, when they negotiate with development partners, they should include DX indicators when they negotiate about upgrading their infrastructure or those kinds.
Okay, thanks. Friederike, you also to react.
Yeah, I just want to add and leverage again on the data component. So I think there's lots of opportunity also to use available data and to target intervention more specifically for better, but let's say more resilient and to the benefit of consumers' outcomes. And in this regard, the World Bank also conducted like a survey, no, not a survey. We worked jointly with the Bank of International Settlement, basically, to look more into details of what national authorities, mostly financial authorities, are doing in terms of financial health. And we explicitly selected the ones that are collecting data, are monitoring and measuring financial health in this aspect, and how these have turned potential policies into specific interventions. So I will not share so much from this paper. I think you can read it. It's on the BIS website for now. But it's just to say that these data that are available and that will become more available will actually be able to identify more vulnerabilities. They will be able to help risk assessments, to identify, gender gaps, etc., if they are available. And I think we mentioned also in the previous sessions a lot that, of course, sex disaggregated data is a huge gap It's also a huge, I would say, lost opportunity in terms of what could be done to assess the data. And not in terms of just the vulnerabilities and risk, but also in terms of, let's say, jobs and growth prospects. But yeah, this just to say and conclude, I think.
Thanks a lot. So are there questions at this stage from the audience? Yes, one hand up. Just let me give you the mic.
So currently we're talking about fiat relevant systems, right? But we know that stable coins now are coming out, and there are a lot of systems around different opportunities to utilize traditional practices and digitize those traditional practices by using stable coins, digitally autonomous organizations, DAOs. They've been tested in a number of places like Afghanistan, like Kenya, and they're working very, very well with traditional communities based on rotational labor organizations, ROLAs, and those types of things. But I'm not hearing anyone talking about stablecoins, and stablecoins and the tokenization and smart contracting of these tools are very, very.
This is gonna come out.
Oh,
just hold on.
I didn't see your agenda first. I apologize.
Sorry.
Okay, so then I'll wait.
Yes. Yes. One hand up at the bottom of the auditorium.
Thank you very much.
Can you introduce yourself, please?
My name is Asogo Ikechukwu from Nigeria. Actually, I'm very much interested in understanding the aspect of digital finance and driving financial inclusion. But one thing I'm here to get from this discussion, and even from my study so far, is why we are trying to drive financial inclusion. Nobody's talking about the financial productive capacity to drive that. Like, I come from a country, Nigeria, where, yes, they are trying to increase access, increase account opening and rest of them. But the infrastructure, the financial sector, the component to actually contribute to driving that, nobody's talking about that. Recently, I just tried to build up an index about that using Findex, World Bank Findex data on 2017. And the only thing I can see is that the financial productive capacity is just about 60%. And the only thing driving that is access to account. And if you decompose that further, you see that access to account, no much transaction going through that account. So what are we trying to do?
Thanks.
So I'm like trying to understand, why are we not talking about financial inclusion productive capacity, especially in the low middle income country? Thank you.
Thanks a lot. Do you want to react to Selena?
Yeah, I didn't fix your name, but thanks for the points. It's why we are saying that the access was the first stage. Really, we need to move to the level that we say. It's where we are going to talk about financial inclusion. Financial inclusion cannot be seen just as access. If you have the bank account and you are not doing anything with that bank account, no transaction, and those transactions that you are doing, they are not contributing in nothing for your life, then we're not talking about financial inclusion. So really, your point is correct. Initially, even that concept of financial inclusion initially was mostly driven on access, but it's now well understood that access alone is not financial inclusion. So you are right with your position.
I'm sorry.
What is about?
Let's have a bilateral discussion after the session. Okay, time's gonna be a binding constraint. So are there questions online or still here in the room? Okay, and then we move on.
Hi, I'm from Vietnam. I have a question because the panel mentioned a lot about financial education. So I want to ask this: who should educate citizens in finance and digital finance? I'm from Vietnam, and the one that doing the most financial education now is the bank or the fintech companies or the insurance companies, and I think there's a conflict of interest there. So if you have any example on like how are other countries or communities are doing on education, then please share with us. Thank you.
Excellent questions. So can we have predatory vendors taking care of the education of the clients, if I want.
In my country, the banks or the financial service provider, when they do financial education, is mostly to their products. But then in country-wise, we do have financial education that is not linked to one financial institution. Like the institution where I'm working, we are doing financial education. The central bank itself is also running financial education program. And at the moment, we have introduced in country financial education components within our primary school system. Is also being part of the education system.
Thanks, Esselina. Someone else want to react? Friederike, briefly, please.
Thanks. Yeah, I would say that there is a trend also to have more national financial literacy strategies coming up. So similar to the ones on national financial inclusion strategies, or not necessarily nationally, sometimes driven by the central bank. This can be led by also the education ministry or the central bank, so it depends. But and some other banks, central banks actually come up with guidelines also on financial literacy that then kind of set the rules for commercial banks and the private sector to narrow this down. But of course, as a central bank, you try to let's say, set the minimum standards that it's not just to use the education or the marketing products just to not to highlight also some risk and prevent, cause disruptions in the market, basically. Right? Yeah.
Thanks a lot. This question was a very nice transition to the second question that I'm going to ask, which is the following: what regulatory frameworks can foster fintech innovation while adequately protecting consumers from new risks like algorithmic bias and over-indebtedness? So how can we do more to ensure financial health while protecting the vulnerable? So Xavier, can I ask you to start?
Yes, and I would start with just by saying that you can't do it perfectly. And maybe that's important because I see often people in charge of regulation have been really good students. Yeah. So often people in charge of doing regulation have been good students, and they are used to hit all the marks to get the best grade, which is great. But usually when you need to have a national strategy, you need to make priorities. And sometimes that will mean that some aspect of what would be a perfect environment would have to be lowered in the priority depending on your stage of development and so on. So that's one first thing about priority. Second, regulation is one tool, but sometimes I see also the attempt with using regulation to create a full ecosystem. And as I said before, that's not the only way for government to engage and participate. And I think, especially when we talk about fintech, it's too complex to be just having some regulation. Like it can work for coal or this kind of thing that are, isolated product, you create a measure or you create a norm. But for digital product, everything is interconnected, everything is linked with business models and technology standard and so on. So you need to be part of the orchestra to make it work together, because otherwise it doesn't. And one third point that's important is to not neglect there is a political component. And I see often a rosy picture of fintech where it's going to be new actors that are going to be bringing in this flourishing innovation, and it's going to be nice for everyone. But at some point, you have incumbents that are making good money when you have financial services, and they have the resources to fight any disruption. Or there is the awful strategy where you create a nice sandbox, you have nice startups that are there, and you keep them at this low environment, and they do nice things that are never going to scale because you don't want them to disrupt the market. So I think that's really important, and that's definitely not the part I'm the most good at, but it's to think of political strategy on how you're going to manage this transition, and it's a relationship of powers within your country that need to be done. And then, so just addressing a bit the question is how you make it work. So partly is creating the ecosystem. So it starts with education, with sometimes a visa, attracting the right talents. So there are all the laws also, like the rule of law in general, and then specific IP laws, corporate law that are gonna enable your ecosystem. So it's not only financial regulation that's going to enable fintech, it's all the stack of what enables business to work. That's one thing. And then on specifically addressing the risk, I think especially in fintech, they are quite evolving, and there are many new that are arising. So I think the key question is how you make them the most transparent for the government, especially. So that's why the sandbox model is taking off, and looking at data in emerging countries, the most emerging countries have developed some sort of sandbox, but it needs to be well designed, because a sandbox is, to me, a way partly for institutional actors to understand this new business model, to create a relationship, and then help together create the right environment. But as I said, there are some risk of keeping people in this level without what's called graduating from the sandbox, so leaving the sandbox and becoming a full business. And that's often a missing part, and that's a problem.
Jin, do you want to step in? Thanks, Xavier.
Okay, actually, thank you, Hi, for that question. So I will be actually tackling digital literacy on this part of my intervention. So as Simone asked earlier, what regulatory frameworks can foster fintech innovation while adequately protecting consumers from new risks like algorithmic bias and over-indebtedness. So innovation has outpaced regulation, so governments cannot always play catch-up with technological developments led by the private sector. And women entrepreneurs often face the consequences. So automated credit scoring system that rely on mobile and transaction data can unintentionally penalize users who share devices or have irregular income streams. So I think it was tackled on the previous session earlier. So without formal financial histories, many women are misclassified as high-risk borrowers, receiving smaller loans or being excluded altogether. So meanwhile, the rise of unregulated digital lenders has introduced new vulnerabilities. So instant approval applications often hide inflated fees and employ predatory collection practices. So this is true, especially in the Philippines, and mostly shared by different ASEAN countries. So borrowers drawn by convenience sometimes juggle multiple loans, deepening their financial instability. So trust is equally fragile. Many small entrepreneurs hesitate to fully digitalize their operations due to fears of scams, data breaches, and misuse of personal information. Incidents of unauthorized withdrawals and privacy violations have made trust the most valuable and most fragile currency in the digital economy. Regulators are responding. So the Philippine Central Bank's regulatory sandbox now allows fintech innovations to be tested under close supervision. So we also have the Securities and Exchange Commission and National Privacy Commission, and they have tightened oversight of online lendings, mandating clearer disclosures and stricter data protection. But inclusion, not just innovation, must remain the guiding principle. So to ensure fintech growth remains equitable and sustainable, so I highlighted, based from my studies, I highlighted 5 key points. So first is on user friendliness. So application and government platforms must be intuitive and inclusive, especially for first-time and low literacy users. So second is proactiveness of government. So national agencies should bring capacity building directly to communities through MSME's Caravan, Digital Finance Help Desk, and localized grievance systems. Third is transparency. So fintech firms must disclose fees, interest rates, and data use policies in plain, accessible language. So the fourth one is accountability. Regulators should audit credit algorithms for gender and income bias and require gender disaggregated reporting on access and defaults. So lastly, on accessibility. So entrepreneurs must have clear, inexpensive channels to dispute unfair charges. So ultimately, digital literacy remains the first line of defense. So every new innovation must be matched with public understanding, not just of opportunities but risks. Innovation should democratize finance, not deepen inequality. Regulation should not stifle progress, it should humanize it. Progress without protection is exclusion by another name. So that's my...
Thanks a lot. Friederike?
Yeah, thank you so much. I would like to go back to the point on regulation and also link it to what you just said, basically. So my team also had the opportunity to work on another paper that's forthcoming on over-indebtedness, which really highlights that it's important to have a more balanced approach to regulation, because if there's too much excessive regulation also within the fintech environment, of course, this could potentially also unintentionally restrict access to finance to individuals and push them towards illegal digital lenders, whereby then increasing the risk of over-indebtedness, basically. So it's really important, basically, to also establish flexible regulation through, as Xavier described, regulatory sandboxes, and have a more graduate approach towards this. And I would also like to strengthen again the role of consumer protection. So you mentioned transparency just now, but with it comes also, of course, disclosure, fair treatment, and data protection. So these are very important, and important also to be mandated that this is actually this is falling under the requirements that the fintech can actually leave a sandbox and go access the market, so that consumers are protected. In this regard, it's also important, of course, to look, because we look at regulation in general a lot, also within the World Bank. So it's a lot important also to look, of course, at data protection and privacy, cybersecurity, and existing consumer protection laws, that they actually also encompass fintechs, depending on how they are designed. Yeah, so I would say, like, when we discuss this, it's always essential to have a more customer-centric risk approach, so like a proportionate risk approach, and this also in relation to credit products, especially. So at all stages, basically, it would be good to have the regulation and supervision aspects in mind, basically in all aspects of the life cycle of a credit product, and see how to mitigate risk at each step, and address outcomes like over-indebtedness early, to prevent additional harm. If you allow, I would like to add just one more point on the artificial intelligence aspect. So I think, because we talked in the previous session also on enhancing data governance, but I think for this it's also important, similar to data protection in general, but also to define really clear rules, data sourcing, usage, and also retention and deletion, which is of course linked to the data protection aspects. Yeah, so to just, when you invest in data infrastructure, that you also have, of course, the capacity building aspect at hand. But yeah, thanks.
Thanks a lot. Esselina?
Thank you. I just want to add to this question.
Is it working?
I think it's not working. Yeah, now? Okay. I was saying that I just want to add some of the challenges that we do have with the regulatory sandbox. It is clear that the regulation cannot come before innovation, but also working in the financial sector where the risk is something that should be managed. You can also not lead the innovation go without any follow-up what is going there. So there is here a big challenge, and the regulatory sandbox is one of the solutions, but we do have also challenge within how the regulatory sandbox, how the fintech, when it's ending the process of the regulatory sandbox, is going to the field, how it's moving. So there is also a space here to improve the framework. I do see also that the innovation hubs and the hackathons can also contribute to this question that we are here discussing, the role of fintechs. And lastly, in terms of framework, my view is that there is a need to be having platform that the regulator himself can also improve the ethics. We need to have the ethics, because here we're dealing with people, we are dealing with the resource of people. So to what extent all those solutions that we are bringing to the market are ethical or as my colleague here was saying, how humanized, that people-oriented. The other things is the accountability. Those systems that the fintechs bring, they need to have also accountability and not just to have different apps that were not taking into account the issue of ethics and the accountability. Thank you.
Thanks, Esselina. You wanted to add one thought?
Yeah, I actually forgot to mention one important point on credit reporting systems. So the credit reporting system of countries, of course, varies quite a lot. But I just wanted to highlight that it's very important also that this is improved in various markets, because there's huge potential also to exploring further the data. You mentioned all the time the gender, so also in terms of gender aspects, and now there are discussions on credit reporting, exploring data with AI, but there's still a lot of work that needs to be done to actually improve existing credit reporting systems. And for this, it's important also that they align with principles of set by the International Committee on Credit Reporting. Just to finalize with this.
Thanks a lot. So are there questions online or in the room? Stuff, is the microphone somewhere? Yeah.
Thank you. My name is Sanjay and I am from Fiji Islands. So I have been in the ICT sector for the past 20 years in the education field. So my question is basically how can a country like Fiji or other small island nations balance the promotion of digital financial innovation with the need to regulate emerging risks such as cybersecurity threats, data privacy, and financial exclusion to ensure exclusive and sustainable development? Thank you.
Thanks a lot. Hideyuki, do you want to react to this question?
It's not easy because like Japan, with other also Pacific development partners, we started increasing the resilience against cyber attacks or those kinds. So we started at that point. We also support providing secure, good power generators, so those kinds. After that, I think we hope those countries can start introducing fintechs.
Okay, another question, Christophe?
Yeah, thank you very much. This is great. Up to now, this is great. I had three questions in reality in a row, and they're all connected. So don't worry, the answers will not be too long. The first one is you didn't really touch on infrastructure. I mean, when we look at Africa, I know Africa better than Asia. There is a big issue around digital inclusion and infrastructure. This linked to the second step of my questions, which is there is a huge divide between rural and cities. And financial inclusions, when you look at the Sahel, and financial inclusion, when you look at Lagos, has absolutely nothing to do. And how do we tackle this on all these issues you mentioned, innovation, risk, and regulation? And the third point is we talk about fintech, but productive developments in Africa, for example, is about lending to corporates, lending to the informal/formal sector. Fintechs are more about individuals lending. And to get to corporate lending is a big issue. We spoke about credit scoring, but at the end of the day, when I'm looking at the fintech landscape in Africa, I don't see that many successes in lending to corporates.
Thank you, Christophe. Who wants to react to this question? Xavier.
Just quickly on the last point, I agree, often fintech focus on consumers, but there are some examples interesting of, like especially Alipay in China, using the data of payments as a way to scoring a business and knowing then and being able to lend. So there is a new way to use this information. And I totally agree with your first point about infrastructures, that the critical components and the distinction. And that's probably a difficulty that have big international organization writing big papers, that it needs to be super focused in specific need on each country. Definitely each situation is super different in terms of these problems.
Yeah, I'll try to.
Jen, yeah.
So I have like very brief actions to responses to those three questions. So in terms of infrastructure, so recently, the Philippines has been facing a lot of issues about corruption. So we'd been facing corruption a long time ago, but it has been raised in the Senate level. So it has been being discussed in like very publicly in the media right now. So in terms of infrastructure, there are generally funding for building infrastructure. And we also receive a lot of foreign funding from JICA, from US, from Australia. But at the same time, like the problem of corruption impedes building up a lot of infrastructure. So on your second point about the divide between the rural and urban. So especially in the Philippines, we have 7,000 islands. So there are a lot of islands that are lagging behind in terms of digital inclusion. So I had several fields when a little bit around 10 years ago. So I was telling about Hideyuki. So this is also connected in infrastructure. So I lived in a mountain community for around 6 months, and they have access to fiber internet, but they don't have satellite dishes, so you cannot access mobile data, but you could access fiber internet. And generally, like people there still hesitate to access fintechs. So for example, we have a wallet called GCash. So they are still very hesitant to access that because they have this fear that their money will be gone, or what if they lost electricity. So they are still, the traditional way of cash. And yeah, those my intervention to your two questions. Do you want to?
Thanks a lot. I think that we need to jump to the last question also, because I asked you to be patient. So the last question is, what is the role of central bank digital currencies in the future of financial inclusion in low and middle income countries? Okay, so Xavier.
Yes. So first, I would like to say that there is a huge interest in emerging countries in exploring central bank digital currencies. We had many missions over the recent years helping countries experiment. I think on the sociological aspect, it's fantastic that central banks get into payments and they have to understand fully what it means to operate a retail payments. So I think CBDC, even if it doesn't do anything else, just by helping the public sector fully understanding what are the practical problems that comes with payment, I think are great. Then I would be a bit more nuanced on what we can expect from it. And we have seen also failures. We have seen some project trying to be spending a lot of money and not being adopted, or even having some reaction to it. So there needs to be caution on when it's needed. And we go back to the question of what's the specific situation. Just to start, I would cite I think to me, one of the countries that did a great job in this exploration is Brazil, that I mentioned just before. They have distinguished the retail payment side, and they have designed this PIX system. So PIX is not a CBDC, it's a fast payment system. The main difference, there is debate about definition, but the main difference is that it's linked to your bank account. It's just a system that allows you to start your payment, and then it's a normal bank account payment. So it works in a country that has already enough banks. It doesn't work in other countries. And that needed some uniform way of payment. So that solved the easy of access, and that facilitated also fintech to participate, because now the fintech can have PIX and be as easy to do, make it as easy to do a payment. And they separated the CBDC discussion for more the wholesale infrastructure. And here it's more about how we redesign the financial market, how they operate, and that led them, because they have successfully designed the retail part, then they can think about the rest. There is a lot of interesting things that are happening, and stablecoin are part of it. Like we have now a different new international payment rails that make it maybe easier to create cross-border payments, and that's important in emerging countries, especially for remittances, where you have a lot of workers that are abroad and pay too much when they want to send the money back. But stablecoin are just a payment rail at the moment, and then there is a need of a lot of so design from entrepreneurs and regulation on the other side on how that really feed into users. One specific aspect of it, and I will just leave it there, and we already have it in mobile money. And just from my technology perspective, mobile money is not so different from stablecoin. It's just one unit that circulates, so it works totally differently, but the objective is the same. It's just one company that creates its own digital unit and moves it a bit more easily than regular payment rails. And what we see in mobile money, the main problem with mobile money is not the digital part, it's the cash, because you need at the end, in many countries, in the end, to be able to pay in cash. So you need someone who has the cash on the receiving end and that able to deliver it on the other side to collect it. And that requires to have trucks moving in sometimes fragile zones with this cash and so on. And that's a full problem. So the main problem for digital sometimes is really practical problems.
Okay, thanks a lot. Who else wants to answer to this question, Esselina?
Yeah. In my country, if I may share the experience, we are not yet at that level of publicly central bank say something regarding CDBS. What we know is that within the central bank they are studying. For our point of view, for us that we are not at the regulator side, we are seeing a lot of advantage in using that technology. But there are also some challenge, particularly when we are in a country, as Christopher was mentioned, where we have rural, we have big difference. It will be important that the trust is also increasing in that process. Our hope is that maybe in coming years, we can have a windows accept at least to pilot and see what does mean for a country like Mozambique to have a CDBS. We know that other countries like South Africa, they are testing, and we do believe that things might change in that region. That's what I can say at the moment.
Excellent. Friederike.
Okay, thanks. Yeah, I just want to maybe summarize a little bit again what Xavier said in terms of the advantages. So there are, of course, also advantages for CBDCs to facilitate government-to-person payments, which will, in fact, reduce the reliance of cash that Xavier just mentioned in terms of mobile money. It has also the potential to have, on the one side, of course, to improve interoperability, and perhaps also simplified KYC and enhance cross-border efficiency. But I think we are not there yet, especially for retail CBDCs. I think to be a bit cautious. Also a little bit about the risk that come with it, because I mean, right now it's of course it's more still the commercial banks that you get your money, and there could also be a risk basically of bypassing commercial banks, which might disrupt credit provision, and there's also of course the risk of having distortion of competition with existing digital payment instruments. And you just asked a question on infrastructure. So of course there's also a reputational risk for central banks if they don't perform the way they have to, that the population basically accepts in case of expects in terms of technical failures and misuse. So I would say it's not a silver bullet, the CBDCs, and the success really depends still on finding and identifying a sound legal and regulatory framework, and regulate also new and existing participants. This will be challenging in the CBDC ecosystem. To have, of course, the existent robust infrastructure. And when I speak about infrastructure for CBDCs to actually work in effect, people need to have digital identities, which when you look at the Sahel and other regions or low-income countries especially, some people don't even have in like a normal ID because they have not functioning systems, let's say, in place that this is possible. And then you would also need, of course, to have strong public and private sector commitment, and of course also the skills to understand and actually be in the capacity to use this. So in summary, there are really different geographical barriers, which depends also on especially the difference between remote cultural barriers and then remote areas in terms of limited access to infrastructure, etc. That have to be kept in mind. And another precondition, of course, also the ownership of smartphones. Just citing again the Findex figures.
while a normal mobile phone, and that's, I would say, is actually the difference also between the mobile money, where you can have it as just a basic smartphone, a basic phone, versus a smartphone where you need to have your digital wallet to be actually be able to pay. So in terms of Findex numbers, it's actually just 64% that have in low and middle income countries a smartphone. And we heard from the previous delegate also in India that it's not easy sometimes, even if you have one smartphone for a household, to actually access it, because there might be cultural barriers that the man is the smartphone holder and will not share it with the woman who is unaware of how to use it, basically. So and then of course there are also constraints in terms of KYC, so to safeguard consumers for risk. But I think one of the most important aspect in CBDCs is, of course, trust. And this aspect comes also in relation to the discussion on stablecoins, because stablecoins is more led by private sector companies versus public. And if you want CBDCs to actually functioning well and to work, you need to have the trust of your population to be actually accepting the CBDCs. And this is not always the case in all countries. If you look at Ethiopia, there's a tendency, for instance, that people don't trust the central bank. They will not use necessarily financial products from them. So yeah, there's still a lot of work to be done. And I think it's very important to have the consumer-centric aspect when you have different purposes. And there are different use cases that are exploring with different cases in mind. I would say for now, wholesale CBDCs, where it's like a transfer from financial institution to financial institution to cross-border, is right now the most prominent use case. But more for retail, for the customer themselves on an individual level, this remains to be seen. So it will be a very interesting future where we have public and private money coexisting with cash. And this is something that has never existed before. So it's a very exciting future ahead.
I think CBDCs will revitalize the private sector by lowering barriers to access funding. And it may also increase entrepreneurship among the younger generation in the Pacific Island countries. And there are hopes that it will promote the circulation of funds inside the country, and it will lead to economic development.
Thanks, Hideyuki. Xavier?
Yeah, just one area in retail CBDC where I'm excited about is offline CBDC, because that's something you cannot do with commercial money. So you could load in a chip in your smartphone your money, being able to pay without any data connection, and even do some subsequent payment. There are some security risks, but I think we are close to an area where we can manage this risk. And that can only be done with central bank money, because otherwise it's a liability of the bank, so you cannot really transfer it easily. So that's one area that's super interesting, especially for areas that don't have good connection in remote areas. And the technology is almost there. So this is the one area in retail where I think there is the most legitimacy in working.
Okay, thanks a lot. So we are getting closer to the end of this session. So I would kindly ask to the five panelists to take around 1 minute each to say a main takeaway or main thing that they would like to highlight to the audience. Esselina, right? So that we start in that direction.
Yeah, my takeaway for this discussion, it is related, yes, we still have a long way to reach what we want as financial inclusion. There are different challenges, but there are also good signal that if we work in a collaborative way, where regulator, we have a proper environment where the infrastructure is there, where we take care of the people needs and the data, will manage, and the technology can help us.
Thanks a lot. Jin.
So digital finance is transforming how people save, trade, and invest. What is true success lies in how it transforms lives. So to make inclusion meaningful, all sectors must work together. So first, The private sector must design fintech solutions grounded in reality, products that are affordable, transparent, and designed around women's business patterns, working with cooperatives and local clusters that can expand access while keeping risk manageable. So second is the academy must continue to provide evidence on how women navigate digital economies, not only through national surveys, but through field studies that reveal how care work, informality, and social norms shape financial behavior. And third is that the government must sustain and scale its inclusion agenda by linking digital payments transformation and e-commerce roadmaps to financial literacy programs with gender-responsive credit, microinsurance, and simplified taxation. So what's equally important is trust. So making digital public services more accessible, responsive, and transparent. So when innovation, regulation, and social trust come together, digital finance can evolve from being a convenience to becoming a pillar of resilience. So one that enables women and small enterprises not just to survive, but to thrive.
Thanks. Hideyuki.
Yes. I remember, one Japanese company started to support to introduce fintech in some Pacific countries. So I could learn many things today, so I can join the discussion back home. Thank you.
Thanks. Friederike.
Thanks. Yeah, I talked so much during this panel that I will try to keep it short. So I think I mentioned it, and it came actually, I mean, we discussed different themes, but I think what came really like all the time up was regulation, of course, and having the right safeguards in place. So I would say just a few words on customer-centric risk approach that has to be proportionate and really like ensure that there are sufficient safeguards, especially for consumer protection. And digital financial services in general, of course, have the potential to increase competition and have more suitable products that will benefit and provide access to the most underserved populations. But it's important that they are fair and designed in a way that they mitigate risk and that there are really the safeguards in place. But to do this, cross-cultural, cross-sector collaboration will be key, especially between private, public, and of course civil society to really have the consumer lens at the heart. Thanks.
Thanks, Friederike. Xavier?
Maybe what I find interesting what we're in this domain in general is that it's one domain where you don't have too much dependencies. So I think it's really exciting to see some emerging economies by just having the right strategy and leveraging the different resources and including the World Bank and all the different resources that can help them to see that you can really leapfrog and go really fast in that domain. So it's complex. As you mentioned, there is many parameters that need to be put together to make a good strategy on these. But there is nothing like you absolutely need. You don't need petrol to do digital finance. So yes, it's just a question of being focused and finding the right strategy.
Thanks a lot. So let me go back to where it all started. So rugby. So you know that in rugby there are 2 half times, but then there's also a third half where the players gather together and typically drink something together and keep on exchanging. So what I invite you to do is to keep on exchanging with the 5 panelists. But before you do so during the lunch break, I would like to thank them for their great interventions.